Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, welcome back. So we've got the market, which is up 5 or 6 points, barely in the green. But for the week, we are still up 0.8%, and it's just Tuesday. It's a holiday shortened week, but for what it's worth, it's a good week. I mean, it's a good beginning. Why don't we just quickly put up DLF, which is down 3% now. I mean, actually, it had a decently large move coming up from lows to about 211, 213. It's down about 6 odd rupees today. So that's coming off. ICICI Bank is down about 1%. That should come up. Again, it had a pretty unbroken kind of a move from 315 to about 340 or so. So it's back down about 4 rupees. I mean, Interglobe Aviation absolutely flat. Again, it had a large move, 3.5% yesterday, about 1,090 odd rupees or so. It's flat. It's not going down or anything. Okay, Ashwani Gujral is with us for some perspective on what he's making of things. Ashwani, thanks very much. This is loss of momentum. This is consolidation. How would you read it?
See, the Nifty is almost flat, but the Bank Nifty is giving you a buyable dip. And since this dip has been fairly mild and slow on the downside, it is buyable because that means that the selling momentum is not very high. And as and when a few of these large banks come back, you could see fresh highs on the Bank Nifty. And Nifty also, you know, things are basically getting into a bit of a range. But Nifty hasn't fallen enough to be bought yet. Having said that, individual stocks, Kajaria Ceramics, that seems to have made some sort of intermediate bottom. That's a buy with a stop of 440, target of 465. CESC is a buy with a stop of 977, target of 1000. And Coromandel International is a buy with a stop of 425, target of 450.
Okay, well, Ashwani, how are you approaching TechM and Wipro?
See, Wipro has just crossed its 200-day moving average, so that probably is a little worse than Tech Mahindra. But not only Tech Mahindra, NIT Tech, the other mid-cap IT stocks, all of them are doing well. So I would much rather get into a Tech Mahindra than a Wipro. Tech Mahindra, we could see targets of 750 happening fairly soon.
The corporate banks, I mean, the twins, ICICI and Axis, Ashwani, where, I mean, momentum was suggesting more gains, a bit of a pause, nothing much, but how would you read it? Opportunity to get in if one is not already in?
See, these are the pauses you should get into. There's no value in buying things once they are, you know, up 5% and making 52-week highs, etc. This is a strong group, and chances are in this correction, you will see a buying return in corporate banks fairly shortly.
Okay, let's get in some Twitter queries then, Ashwani. Pavan Asrani has bought 300 shares of Tata Global Beverages at 315 6 months ago. Wants to know the future of the stock.
See, if he's an investor, you know, then you need to average here so that your break even comes down a whole lot. If you're a trader and you bought at 315 and now it's off 80 bucks, you should have gotten out much earlier. But assuming he's an investor, average here, it's a, you know, pedigree stock, and it's found its mojo, just corrected for last 6 to 8 months. At some point, I think it will cross 325 again and possibly go up another 80 to 100 points from there. So he needs to, you know, build positions on correction and then possibly wait for the upside to play out. Broadly, you know, 200, 220 is his stop.
Well, let's get talking about the fundamentals of the market. We have Jyoti Vardhan Jaipuria joining in to discuss what exactly he's making of the current situation. Jyoti, hi, thanks very much for joining in. Well, you know, when we spoke, say around a month ago, you had mentioned that, you know, the bulk of the underperformance that we've seen in the mid-cap companies is largely behind us. From then to now, where do you think we are when it comes to the mid-cap space?
So I think what we've got is a further we got a bounce in mid caps. We got a improvement in the broad Nifty also. So I think that stand still holds that we're not going to see too much of underperformance from the mid caps from these levels. But I think what I'm a little worried about is probably we need to see a correction in the markets in general at this point. And when if the general markets correct, the mid caps will correct also. I don't think they'll correct too much differently from what the larger markets correct. But I think we'll see both the large caps and the mid caps probably get into a bit of range bound phase. So it's probably range bound to down market now for the next few weeks.
What could be the extent of the drawdown? What is worrying you really, Jyoti?
So both the things. One is if you look at the globe, there is a fairly large amount of turmoil. Markets are expensive everywhere. And we've seen a lot of emerging markets come under pressure because of the US interest rate increases. I think that will still continue to play out because probably inflation is now starting to head up. And at some point, what we have to keep a watch on is, does inflation go up faster than what everybody's been anticipating at this stage? Because that's the one trigger which could lead to US interest rates getting hiked much faster than what we are just now building in.
Jyoti, in that context then, I just wanted to ask you that what kind of calls are you now taking in terms of specific stocks? Are you allocating money in a stock such as Tata Motors, which is down 36% year to date? Or are you putting more money into a TCS, which is already up 48% year to date?
Yeah, so like there's some are tactical calls, which I'll not talk a lot about, but essentially what we are building in, and I think we spoke about this a bit earlier also, that my thesis still is that in spite of all the global turmoil which we are seeing on interest rates, we are into a recovery phase for the Indian economy. So the economy is recovering, earnings are recovering, and over the next few years, I think we'll get quite a sharp compounded increase in earnings, which could be like in the range of between 15 to 20%. So that's what we are trying to play, that what are those sectors which will do well in that recovery phase, where earnings could, double for companies over the next 3-4 years. And is that priced into the market? And if that is not priced in, then which other stocks to buy? So that's what we are really focusing on. That's where bulk of our portfolio is, that where can we make big money over the next 3-4 years.
So just to complete that point earlier, when you said that we may need to see some correction, are we talking about meaningful corrections worth waiting for? Or, you'd be okay buying here and, it's just a pause or maybe a couple of percentage points and market moves right back? Are the falls that you're referring to going to be worth waiting for? Are we talking about 7-10%?
Yeah, I think we could be in the 5 to 10% range. So, we are holding some cash for that sort of fall, because when these falls come, because everywhere markets are expensive. So when markets are cheap, then you get less worried about this. But when markets are expensive, then sometimes just small catalysts create a fall which is much more than what one anticipates.
But what do you think will probably trigger this fall, Jyoti? Because we've put behind the rupee at 70, we've put behind trade deficit, which is also coming at multi-year highs now. It seems as though the market is shrugging off most of what could be macro concerns at this point. What's your sense in terms of where that trigger could come from for a correction?
Yeah, so I think the trigger will be global. I think it will be like a fall in global markets, which India will be part of also. But if you look at specific India triggers, then probably, it could be as we near the assembly elections and we start getting opinion polls which show that things are not going the BJP way. If, let's say we get all the 3 states BJP losing, or opinion polls show that at least 2 of the 3 they are losing. If, they lose just one, Rajasthan, then I think the market is probably building that in. But if, let's say, opinion polls start indicating that BJP could lose all 3 of the states, then I think that would start worrying the market.
Right. So, just to take off on that point, if you could expand that a little bit by giving examples, Jyoti, the Ekta's point about whether her point about buying TCS or Tata Motors essentially was not about those stocks per se, but basically what are you looking to do here, which is, buying maybe cheap companies valuation-wise, which could be potential turnarounds, or betting on the sure shots, which valuation-wise may have limited upside. If you could use some examples and illustrate the earlier point that you made.
Okay, so my view is that what we'll see is a sharp recovery in earnings in a lot of sectors which probably have not done well over the recent past. Last time we had discussed a lot on capital goods, so that's one sector where I think no new capacities have come up, demand is picking up, so I think we'll get a big operating leverage and we can play out. Probably the another sector which we are focusing on is the corporate banks. So the retail banks have done very well, as we know. The corporate banks and the public sector banks have done very badly, but our sense is that the corporate banks are coming to probably the last stage of the pain point, and over the next few years we'll see probably provisioning there being much lower than what we've seen over the last 3 years. We've actually seen a couple of cases getting through in the bankruptcy court, and that has shown that maybe there'll be a write back of some of these loans where the amount they recover is more than what was standing in the books after the write off. So that could be one trigger for the corporate banks to do well. And as the recovery in the economy happens, you'll start seeing a lot of these sectors which earlier we thought has got written off, and that starts to do well. For example, if you see the bankruptcy court, the cases which are getting sorted out are the steel sector. And 4 years ago, steel was one of the biggest pain points for these corporate banks. But now, you probably are going to see write-backs in them.
Okay.
Here, the one caution I'll put is, sorry.
No, go ahead, Jyoti.
Okay, so one caution is the power sector, which I think, is a pain point and which everybody's been grappling with how to sort out. But otherwise, I think a lot of the erstwhile sectors which we were worried about, probably, the provisioning to a large extent is behind us now.
Okay, Jyoti, thanks very much. Appreciate you joining in. A quick conversation there.
Thanks a lot.
Jyoti essentially saying that, to begin with, he told us he likes capital goods, corporate banks, but basically he's holding on to some cash. And the reason he's holding on to cash, we didn't ask him how much, but he's holding on to cash, and he's saying that you expect to see some corrections, could be between 5 and 10%. Local markets, Indian markets are expensive, and probably the trigger could be a global accident of some sort. So the market is holding on. I mean, 5-point change or so, but it's had a strong run. So remember that 11,546 is where we stand at this point. We've got the Blue Star management joining us now to talk about business, and we'll also touch base on, their assessment of the situation as far as the Kerala floods are concerned, and how business, if at all, gets impacted. Mr. B. Thiagarajan is Joint Managing Director of the Blue Star. He's with us. Mr. Thiagarajan, thanks very much for joining us. First up, if you could give us an update for the quarter so far. How are things sort of shaping up this quarter?
Good morning. After a weak summer, June was a good month where we witnessed some growth. July and first half of August also indicates that it is better than last year. But then I must caution you, last year was a GST recovery period. Compared with that, it should be obviously doing well. We look forward to festival season. Consumer spending continues. The walk-ins are good in showrooms. So one must hope that the festival season is going to be a stronger one before we can focus on the last quarter, the pre-summer sales. This year is not going to be an energy label change year, so there is no GST related issues. So therefore, we are somewhat optimistic about the rest of the period. You mentioned about Kerala. Our sympathies are with the people who are suffering, and Blue Star employees have contributed 1 day's salary, and equal amount is contributed by the company, and we will support the relief work. Onam is the season which flags off the festival sale period. Obviously, Onam will be subdued at this point of time. Rest of the country, I am seeing the walk-ins are healthy. The consumer spending story continues. So therefore, the inventory pressure the industry had, including Blue Star, I think close to around 60 days of inventory was excess in the system due to weak summer, and hopefully we should be liquidating that during this period. The other update is that normally one would have raised the prices due to exchange rate or the commodity prices other than copper. Copper is becoming softer. But the price increase has not taken place due to the inventory. The only silver lining is these inventory were bought when rupee was around 67 to a dollar. Therefore, there is some respite with this current exchange rate. The important update is commercial segment, light commercial or large corporates, industry, factory, they are all into the capacity building cycle.
Sure.
So the inquiry inflows in large systems are very, very healthy.
So, Mr. Tyagarajan, what is your estimate for growth in this festival season? What kind of, estimates are you working with internally right now?
Our goal is that very ambitious, that we compared with the previous year during the festival season, which you can take it as September to December. This particular season we want to grow by around at least to 20%. But I have a feeling it should be possible. If the market is going to grow anywhere between 10 to 15, 20% growth we can attempt. This is with regard to the revenue. The margin side, I think there is going to be pressure to the extent of around 150 basis points because you do not have the headroom to increase the prices, because the entire industry is carrying inventory, so each one will be interested in disposing them off before preparing for the next summer season.
So margins will be lower, right? This is what you're saying, 100 basis points or so.
That's what I am guessing, in the sense that I had shared with you in this very channel. From July 1, we should have increased the prices by at least 2 to 3%,
right?
Which has not taken place. It is not possible because one would be interested in converting the inventory into cash. So therefore, you can make up something, but I think there should be a margin pressure, because other than copper, nothing is softening, and the exchange rate, you know what it is, and I am not foreseeing any reason for that to come down in the 6-month period. So right direction would be to grow and gain market share, and that's fine.
Mr. Tyagarajan, just one quick question.
There's going to be some correction that is going to take place.
Yeah, you said you plan to grow 20%. You aim to grow 20% during the festive season. Industry is 10 to 15%. I mean, during festival season, which is essentially the best period of the year for
10 to 15%, it should grow
for the industry, and you 20%. My point is 10 to 15%. I mean, have we seen the industry itself slow down a little bit, or it's always usually in the festive season, September to December, between 10 and 15%? The industry grows between 10 and 15, or has that rate come down a little bit? Yeah.
I think it is, over the years I am seeing the shift, that it is not entirely a summer product at all. The festival season is becoming stronger for this category, so therefore I am optimistic that the growth will take place. It had happened even last year. We witnessed somewhere around 12.5% growth during this period, September to December, and therefore one can look forward to at least 15% growth. Because any segment that we interact with, all of them are upbeat about whether it is FMCG, whether it is metallurgical, whether it is pharmaceutical, whether it is retail. All of them say they are witnessing the best period in the past 4 years in terms of growth. Therefore, they are going back to expansion or employment generation So that is good for the industry on the whole. That's why I'm telling you, we are witnessing so much of inquiry inflow into electromechanical projects or packaged air conditioning, refrigeration. Everywhere the inquiry inflow level is very, very high, which should result in increased order inflow from these segments also in the coming months. In water purifiers, this is the peak season. The monsoon is the period when that market peaks. There again, the demand is very robust. Of course, we are a new player building market share, but we are witnessing consumer spending there as well.
Well, for the markets, we've slipped into the red. So the Nifty is now down around 9 odd points. Just to put it into perspective, when we started off the show, the Nifty was up 11 odd points. So there's been a little bit of a reversal. But all in all, it's just about turning out to be a flat consolidatory kind of session for the index. Not so much for the Bank Nifty, which is now underperforming and extended its underperformance. So currently at the low point of the day, down around over 100 points currently for the Bank Nifty. Advanced decline ratio just about even keel. So currently standing at around 1:1, both on the National Stock Exchange as well as on the Bombay Stock Exchange. Just watch out for a stock such as FTC. That one is down around 4.6%, received 8 observations from the US FDA. So there's some amount of concern coming in on that stock, which has slipped below its 200-day moving average.